In this video, I'm going to walk you through buying a fractional share through Fidelity and also the importance of why that matters. Hey folks, I'm Harris, and in our last video, we created our first brokerage account with Fidelity. This video serves as a second step to that video where we buy our first stock, but this time I'm going to have a strict budget of $100 to spend, and I'm going to have a fixed price for what I want to buy the stock for. And since that stock is worth more than $100, I will buy a fractional share as a result. So if we head over to Fidelity, and I'm logged into my brokerage account here, as you can see. So if you head over to where it says quote and click on quote and type in any index you want, so whatever stock you want to buy. In my case, I'm going to be looking at the Vanguard Total Market Index, which is VTI. So I'm going to type in that ticker symbol here, and it'll show me what the current market price is. So the current market price is about $225.08, and you could always click the refresh button to get the latest quote. But let's say I want to buy this and I have a $100 budget. So I'm going to click trade. And you could see here, so I want to, what I'm trading is going to be a stock or an ETF. Obviously, VTI is an ETF, so that's what we have highlighted. This is the correct account where I want to execute the trade from. VTI is the symbol name, and now this is where we get into the fun stuff. So again, the current Vanguard price is $225.10. You could always hit refresh, but I want to buy VTI, and I want to buy $100 worth. So by default, as you could see, shares is what's checked in. But what we want to select, if we're, if you want to buy a fractional share based on the dollar amount budget that we have, in my case, $100, I'm going to click $100. And then I'm going to type in the dollar amount, which again is $100. And what that effectively means is I want to buy $100 worth of Vanguard, VTI. Now down here, you have the option to execute at the market price, which means whatever the price is right now, that's what it's going to execute on. So if it's $225.09, that's what you'll get. By the time I hit preview order and I submit my order, if that $225.09 changes to $227, if it goes up or down because the market is volatile, it's going to execute at that market price. So that's kind of the concern if you do execute at the market price. So for that reason, I'm actually going to just put in a limit order, which means I'm only willing to buy VTI if it's $225 flat or less. So don't buy this stock if it's over $225, and only buy $100 worth. So obviously VTI is well over $100, so it'll probably give me, less than half of a share of VTI, which is perfectly fine for what I want to do here. So I'm going to click preview order, and then you come to this page. Just make sure you read the fine print, preview the order, make sure that everything here is correct, that you're trading from the right account, it's the right symbol, it's the right buy price, the right type of order, and then place your order if everything looks good. So again, I had a $100 budget, and that's the estimated value of this order, so I'm going to go ahead and click place order. Now it says my order has been received, and it gives me an order number to reference at a later time. So I could always click manage orders to see the status of this, whether or not it executed or whether or not we're still waiting for that price to hit for this order to execute. So I'm going to click manage orders. Now that we're on this page, we could clearly see that our order is still in an open state, which means it hasn't yet hit that price, so the order did not yet execute. And this order is still good for the duration of the day, so until the market closes, if we do hit that 225 number or less, at that point, my order will execute. If we don't hit that number, if we don't hit that price, it's actually going to get canceled, and we'll have to generate a new order for the following day.
1 hour later.
So we've waited a few minutes now, and I just want to check the status of this order. So let's see what happens. So I have the screen open here still, and it has not yet been refreshed. So we're still on that page. It still says opened. I'm going to go ahead and click refresh to see. Okay, and it did fill, so that's great news. So it turned out that the order executed at $224.99. And overall, I only spent $99.89, so that's well within my budget, and that's the whole purpose of this video. So we were able to buy a stock at the price we're comfortable for and within a certain budget. So I only wanted to spend $100, and I only wanted to buy VTI if I got it for $225 or less. And obviously it does take a little bit of time, because that is the purpose of a limit order. It's not going to execute right away because you're not executing at the market price. You're executing at a price that you fix yourself. So when it does hit that fixed price, that's when it'll execute. So it's pretty normal for it to take a day or maybe not even execute at all, but at least you're insulating yourself from that volatility. And then we can always go to our positions page just to see what our portfolio looks like. So obviously the majority of the assets that I have in this account is cash, and then we have a fractional share of VTI priced at $100.17, and we have a quantity of 0.444. So we bought 0.444 of one share of VTI. And that's exactly what a fractional share is. So now let me give you a little background about the importance of fractional shares and the importance of limit orders. But first, be sure to hit that subscribe button if you do find content like this helpful. So say, for example, you like to buy the dip on stocks and you have limited capital available. Let's look at Tesla, for example, which is a $900 stock. And let's say you have about $2,000 to invest. So let's say Tesla now drops to about $850 and you want to buy a dip. So you buy one share of Tesla for $850. The next day it goes down to $800 and you buy another share of Tesla for $800. Now on day number 3, Tesla drops to $750. But guess what? You can't buy the dip anymore because you don't have the capital. You've already spent $1,650 of your initial $2,000 cash. So as a result, you miss out on buying the dip and you cannot buy that stock because you are now out of money. Well, for this exact reason is why I wanted to create a brokerage account where I can trade fractional shares, because now I can buy just $100 worth of Tesla every time it goes down, and as a result I'll never run out of cash, and I'll also be able to take advantage of the true effect of dollar cost averaging, because that's exactly how dollar cost averaging should work, because I'm putting the same $100 to work every single time. Now for the importance of limit orders. So every time you buy and sell a stock, generally by default it's going to execute at the market price, and I personally don't like to execute orders at the market price because the market could be volatile. By the time you hit submit on an order, and let's say the stock price is $225, it could jump up or down to $227 or $223 or whatever the case is. So by using a limit order, you effectively have a fixed price for what you're willing to buy or sell a stock at. So by placing that VTI order at $225, that guarantees that I will not pay a single penny above $225. So you insulate yourself from the volatility of paying more for the stock than you initially intended to. In a nutshell, that's pretty much how limit orders work, whether you're buying or selling a stock. So we effectively have 3 key takeaways from this video. The significance of fractional shares, for one. The significance of limit orders, whether you're buying or selling a stock. And number 3, how to execute a trade both with fractional shares and also a limit order through Fidelity. So I hope you found this video helpful. Please be sure to subscribe to the channel for more content like this. And of course, if you have any questions, leave them down in the comments below. Thank you for watching.